Welcome back to Investing Talk Podcast.
Today we're looking at Odyssey Marine Exploration.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis of this company. Odyssey Marine Exploration is, well, it's a pretty unique player.
Yeah, how so?
Fundamentally, they're a seafloor mineral resource development company. So they're focused on those, high-value assets way down deep.
Okay, like what specifically?
Think polymetallic nodules, subsea phosphate, even some specialized gold recovery projects. It's all about what's on the ocean floor.
Right. And when you look at what they actually do, it sort of highlights their main advantage, doesn't it? That operational moat.
Exactly. Very few companies out there have the combination of regulatory history, the specialized ships, and the technical know-how for this kind of deep water work.
It's not just digging, it's complex ocean engineering.
Absolutely. Yeah. And this whole setup, their asset base, it positions them perfectly to ride a couple of massive macro tailwinds.
Okay.
Well, first, you've got the whole EV transition, right? That needs huge amounts of battery metals, cobalt, nickels, which are in those polymetallic nodules.
Makes sense.
And second, there's the global demand for secure, sustainable fertilizer sources. That ties directly into their subsea phosphate potential.
And these aren't just blips on the radar. These are like long-term structural demands we're talking about, multi-decade stuff.
Precisely. But, to even play in that league and attract the big money, you need your corporate house in order.
Which brings us to that big news from October 2025, finally regaining Nasdaq compliance.
Yeah, that was huge for them. They were facing a delisting threat, but they managed to keep the closing bid above that crucial dollar mark for 10 straight days.
Problem solved.
Might seem like just a technicality, but clearing up a delisting risk, that's absolutely essential.
Why is that so critical?
Well, it instantly makes the stock safer, or at least appears safer, for major funds. A lot of institutional investors have strict rules. They just can't own non-compliant stocks.
So getting compliant basically unlocked a whole new potential group of buyers.
Exactly. Big institutional money that was previously just off limits.
And it looks like the company used that momentum, didn't they, to shore up their finances?
They did. We saw some pretty significant capital injections recently. Over $8 million secured between August and October 2025.
How they manage that?
Mostly through investor stock purchases and exercising warrants. And that cash injection, well, it secures their operational funding, keeps the lights on for current work through at least the rest of 2025.
Okay, runway extended.
Yeah, but maybe the more, let's say, strategic financial move was the debt reduction.
Right, I saw that. They converted about $2.5 million in convertible notes.
Exactly. Turned it into roughly 2.35 million shares of stock.
So that's the classic trade-off, isn't it? Less debt now, but more shares out there, potentially diluting current holders.
It absolutely is. But look, for a company in this phase, capital-intensive resource development, it's often a necessary evil.
Prioritizing survival.
Pretty much. They're prioritizing solvency, extending that operational runway as much as possible.
Yeah.
Taking debt off the books means lower interest payments, less mandatory cash going out the door.
Which strengthens their position as they head towards those really critical project milestones.
It buys them time. And in this highly regulated deep-sea sector, time can be absolutely priceless.
Okay, so speaking of those critical milestones, the project momentum seems clearest in the Cook Islands right now.
Yeah, definitely. Back in September, they deployed those two autonomous benthic mini-landers, ABMLs.
Fancy name. What do they do?
This is the hardware that actually does the environmental science down there. And this detail is really key, especially if you're looking at the long-term picture.
How so?
These ABMLs, they're specifically designed to collect advanced baseline environmental data. Things like currents, how stable habitat is, what kind of species are living there.
Okay, the groundwork.
It's the currency you need to pay the regulators, basically. Bodies like the International Seabed Authority, they require this kind of data before they'll even consider granting extraction permits.
So it's the technical proof needed to get past that regulatory hurdle.
That's it. Satisfy the regulatory moat. And their positioning there is quite strategic, too.
The Cook Islands work ties into that new U.S. partnership, right?
Exactly. The United States Cook Islands Seabed Mineral Development Partnership. That gives the whole project some serious geopolitical heft.
Suggests the U.S. sees this as strategically important for critical minerals.
Absolutely. It frames it as part of a national supply chain strategy. And the potential scale we're talking about here. It's just immense.
How big are we talking?
Just their ocean minerals project alone, the estimate is around 519 million metric tons of polymetallic nodules.
Wow. Okay, put that in context for us.
Well, think about current global nickel production each year. A resource base of this scale could offer genuine long-term supply chain security, the kind that traditional land-based mining struggles to match sometimes.
So it's not just finding some rocks, it's a potentially strategic global resource.
That's the potential, yes.
Okay, so we've got the big picture tailwinds, the corporate cleanup, these massive assets. But here's where it gets, well, really interesting, maybe a bit confusing. The financials.
Ah, yes, the conflicting picture.
Exactly. You look at their latest 2024 filing, the core business revenue, it's still tiny. Actually declined 4.4% year over year, down to like $768,000.
Yeah, just over $750,000 in recurring sales. Very low.
But then you look at the bottom line.
And bam, net income surges to $15.66 million. A massive jump, like a 193% increase.
That's quite the contrast. Low sales, huge profit.
This divergence, this paradox, is really the heart of the investment case or the puzzle for Odyssey right now.
So how does that happen? You don't go from under $1 million in revenue to nearly $16 million in net income from just, selling services.
No, you definitely don't. Given their history and business model, this kind of surge almost certainly comes from a one-time gain.
Like what?
Could be several things. Revaluing some assets, maybe a successful arbitration win related to past salvage claims, or perhaps a specific legal settlement going their way.
So good news for the balance sheet, but,
and this is crucial, the trailing 12-month EPS is still negative, about negative at 38 cents. That tells you the core deep-sea exploration business isn't generating sustainable, repeatable cash flow yet.
So it's more of a capital management win, maybe cleaning up old issues rather than the main business suddenly maturing.
Precisely. An important distinction. It shows good financial management, perhaps, but not operational success in their main goal. Not yet, anyway.
And that distinction really matters when you look at the valuation, right? A market cap around $134.5 million.
Yeah, based mainly on the promise of future resource extraction, not on current earnings.
Compared to less than $1 million in recurring sales, isn't that just buying a very expensive lottery ticket on future regulatory wins?
We have to be honest, there's definitely an element of that. The valuation is pricing in a lot of future success, execution, and favorable regulation, the high expectation scenario.
Which is why understanding the risks is so critical. And they don't pay dividends, no buybacks. All the money's going back into development.
Correct. Investors right now are accepting pure speculation risk, betting on that future payoff.
So let's talk specifics on risk. What are the core risks here? Not just generic stuff, but for deep sea mining specifically.
Good point. The risks are definitely specific, and they are significant. First, number one is permitting dependence. Everything hinges on getting the green light from regulatory bodies like the ISA or national agreements.
And delays are common?
Very common, potentially very costly, and they can just crush near-term sentiment and value. Second, you have major environmental and, linked to that, geopolitical risk.
Environmental groups must be watching closely.
Extremely closely. They're highly motivated, often well-funded. A single big legal challenge or even just a regulatory pause driven by environmental concerns could stall the whole sector, not just one company.
And the geopolitics, since it's often international waters.
Absolutely. Conflicts between nations, shifting regulations about who controls the seabed, those are always looming potential factors. And finally, related to the financials we just discussed.
Dilution risk.
Yeah, the risk of needing more money. They've got funding through 2025. Great. But if they miss key milestones or operating costs jump unexpectedly, they might have to issue more shares down the line. That risk remains.
Okay, so significant hurdles. But despite those, the company seems to have quite a few potential near-term catalysts lined up. Things that could really move the needle in the next, say, 3 to 6 months.
Definitely. The calendar looks pretty active. The most immediate thing to watch is the upcoming Q3 earnings release. That's scheduled for mid-November 2025.
What are we looking for in that report?
We need updates on the deployment and data collection from those ADMLs in the Cook Islands, progress on further debt reduction, and critically, any hints or announcements about new partnerships.
Especially for the Cook Islands, given the U.S. involvement.
Exactly. That's a key one.
Yeah.
Then, beyond earnings, you have some scheduled potential institutional drivers.
Right, the things that can force funds to buy.
Yeah. Keep an eye out for potential inclusion in the Marine Resources ETF that's possibly early December. And then there's the institutional fund buy window penciled in for early January 2026.
And these events can really boost trading volume and support the price just from the mechanics of funds needing to build positions.
They absolutely can.
Yeah.
And that potential institutional appetite, it sort of underpins the generally bullish view from analysts right now.
Yeah, the targets seem pretty high. What's the consensus?
The average analyst price target is hovering around $4.06. That's, roughly 84% upside from where the stock is trading currently.
Great jump.
And some forecasts are even more aggressive, going as high as $7.27. But, those higher targets are definitely conditional on smooth sailing with projects and regulations.
Of course. And when you have that kind of potential upside, especially in a niche area like this, the rumor mill starts churning, right?
Oh, yeah, definitely. We've seen 4 main speculative catalysts getting talked about quite a bit in the market lately.
Okay, what's the buzz?
First, there's the long-discussed idea of finalizing that proposed reverse stock split. They might pull the trigger on that to meet certain institutional ownership requirements, maybe make the share price look more substantial.
Okay.
Second, persistent rumors about maybe using that existing $50 million shelf registration.
To raise more cash.
Potentially, yeah. To maybe accelerate exploration if they hit a big regulatory win soon. Now, management denies they have immediate plans for an offering, but the shelf is there.
Got it. And on the project side?
Speculation there focuses on expansion. Third, there's market chatter about potentially securing expanded exploration licenses in the Cook Islands. That would really solidify their position there.
Makes sense. And the fourth?
Fourth, industry watchers are kind of expecting or hoping for a new joint venture partner announcement for their Fiosagmex phosphate project down in Mexico.
And getting a JV partner would be big because
it would validate the resource, bring in outside capital and expertise, and give them better exposure to North American agriculture supply chains without Odyssey having to fund the whole development internally. Big de-risking event if it happens. Okay, lots of potential catalysts and rumors swirling. Let's pivot quickly to the technicals. How does the chart look amidst all this?
Well, it reflects the uncertainty and potential. As of November 7th, the price was around $2.21, but the volatility is high, like 25% monthly volatility.
Wow, that's moving.
Yeah, and the expected trading range analysts are putting out for the next 3 months is pretty wide, from support around $2.11 all the way up to that average target of $4.06.
That spread really shows the make-or-break potential of these near-term catalysts.
It absolutely does. Huge swing potential. But crucially, the longer-term technical setup, it actually confirms the current momentum is fundamentally positive.
How so?
The price is trading pretty comfortably above both the 200-day moving average that's way down $1.27 and the 100-day average, which is around $1.87. So the recent sideways action, or dips, are happening within a larger established uptrend. It's consolidating gains, maybe?
That's a good way to put it. It confirms the bigger trend is still up, for now.
And what about sentiment? Who's driving the bus here?
It seems mostly driven by that optimism around the catalysts we discussed. Retail interest is definitely high, lots of speculative chat online. Overall, you'd call retail sentiment neutral to bullish.
Any insider action?
Interestingly, verifiable insider trading data is pretty scarce lately, which kind of suggests the current momentum is really external, driven by future hopes and those market triggers, not necessarily insiders loading up.
Okay, so pulling it all together, what does this mean for you, the listener, considering this stock?
Right. Well, the bullish thesis, combining everything, probably gives it, let's say, an overall bullish rating, maybe an 8 out of 10, but with caveats.
It presents that asymmetric opportunity we talked about.
Exactly. You've got the regulatory compliance sorted, a stronger capital base now. After the debt conversion, they still hold that unique asset position. And you have those high analyst targets. It really suggests the risk-reward could be skewed heavily to the upside.
If they keep executing successfully on their project timelines.
That's the big if. Execution is everything from here.
So who is the stock really suited for then?
In summary, probably 2 main groups right now. First, you've got your risk-tolerant traders, people looking to play the volatility and momentum over the next quarter, especially around earnings and those potential ETF inclusion dates.
High risk, high potential reward, short-term focus.
Correct. And second, you have longer-term investors, people who are specifically looking for exposure to these sort of next-generation strategic resource plays like deep-sea battery metals and are willing to wait.
Patience required for that second group.
Definitely. Now, if we just take a step back, connect this to the really big picture, it's clear the story of Odyssey Marine Exploration isn't just about their own balance sheet or projects.
It taps into those larger themes of global resource security, even nationalism.
Precisely. So a final thought for you to consider. If you look at that recent U.S. executive order on offshore critical minerals, and you factor in that strategic partnership with the Cook Islands, just how much political and economic weight is really sitting behind the potential success of this company's specific projects now?
Hmm. That's a powerful question. Something definitely worth keeping in mind when you're trying to figure out the true potential ceiling for a stock like this.